Welcome back to Primary Source China Investment. I hope you're all licking your wounds from your bracket busting experience. So show Z2. What we wanted to talk about this week is a little bit about China's position and China's interests vis-a-vis trade, Ukraine, Russia, the US, and on and on and on. And we're here to say, China is not bailing anybody out. It's really naive to believe that Xi Jinping can change, Putin's mind. It's also naive to believe that China would put its interests behind the interests of the Russians, the Ukrainians, or even the Americans. Recall North Korea. Xi or Hu or Jiang before him couldn't stop or further contain Kim. As peng.guo has mentioned on this show many times, peace brings prosperity. In Brussels this week, China was a big part of the subtext, with leaders believing that China could or is ready to provide some economic assistance to Russia, allowing the Kremlin to circumvent all of the sanctions that these countries have lined up. Would China do this? Absolutely. Would China risk trade with the EU and the US to assist Russia? Absolutely not. China's trade with Russia is less than 10% of that of the EU and the US. So China's position is that it wants to continue to trade with Russia and Ukraine. Remember, Ukraine's biggest trading partner is also China. So China's interest here is to continue to trade. So this position of ambiguity and discussion of peace, I think, is where China is going to continue. They're not going to explicitly take any side here except the side of the Chinese.
China is, firstly, Chinese people really hated the war. So because from the China recent history, probably like the World War II and the Civil War, that's a lot of the war happened in China. So people know what means war, what's the consequence, what's the how they suffered the war. So that's very sensitive, and nobody pretty much supported the war at all. And right now, and China really just get some of the fortune and get some change and move to the contemporary country. This is just the starting point. As the China and the Russian and the Ukraine relationship, they are really like the neighbors next to us. So for the thousands of years, so they get a trade, they get right now keep the normal relationship rather than conflicts with each other. So I think pretty much both countries people get a benefit of such kind of relationship. And unfortunately, Russia and the Ukraine get into war right now, and I think that's really hurt China as well. I don't know what exactly China can do. I think that right now China is really trying to contribute to the political solutions and help out each other to solve the problem. This is not just even seize the file doesn't mean solve the problem. It's really try to find some political solutions. So get some permanent agreement and permanent peace. Otherwise, they are keeping into the war, and not just China suffered this war. I think global is also suffered the war. The high inflation and lack of the food, all those kind of things. Yep. And nobody knows.
OECD came out and said, this war probably hit global GDP by 1%. I mean, OECD can say a lot of things, but that's actually going to be very true, right? Because trade is going to suffer, price, all sorts of things have a knock-on effect to productivity. And remember,
and China also have the heavy investment in the Ukraine, and right now all the cities and the file and all this investment looks like a loss. So the financial institute, they check the exposure to the Ukraine risk and suffered a loss. And the same thing for the Europe. So while the Europe make the sanctions to the Russian, they really don't know how much investment for the financial companies in Russia. So after they take the Russian, they just realize they have the billions of dollars in, there's hundreds of billions of dollars in Russia. They lost it over the night. For most of the bank and the financial institute, the political decision maker didn't know this at all. They even not check it at all.
Yeah. There's also going to be a ton of defaults, right? Because Russia's now going to say, they're not going to pay back any U.S. dollar denominated notes. I mean, that's going to be the knock-on effect. And On China's side, remember, China is the global trade leader. So, China does have a vested interest here. It's an interconnected world, and, pulling that interconnectedness apart does have derivative effects that are not obvious initially. Like we're talking about, the default on US dollar denominated, right? We're hearing about a lot of planes. Boeing's got a lot of planes. Who's going to hold them? Is Russian, airlines going to pay the debt on them or the lease payments, right? This is big money.
That's true. Yeah, everything is big. So I think right now I just realized a lot of the small political decisions that really impact the billions of dollars, trillions of dollars. Right now the deal get bigger and bigger. But you can clearly to see those decision makers are really the rookies in this area. So I wish more investment professionals should join the political world and have them make the decision. The ideally should be some investment professional to make the bigger global decisions.
Right. The derivative effects of a lot of these decisions is going to have long-term implications, because a lot of these sanctions that were imposed don't go away. Even if there's a ceasefire, like you mentioned, ceasefire tomorrow doesn't mean these sanctions go away, right? Because, once
that's exactly right,
there's going to be a lot of knock-on effects on the financial side that are going to work their way through the system over many, many years.
I think global political leaders, they really they have the job and the responsibility to keep the relatively stable environment. Otherwise, like the commodity market, so they make the one decision, commodity market is get sold or get crashed over the night. So nobody can afford such kind of the risk, and all the supply chain will get screwed up. They really don't know how to manage those kind of risk.
Yeah, they're talking about nickel.
Not afford it. And also a stock market is the same thing. Like the China delisted the companies over the night. So all the stock get crashed. And as I said last time before, while crashed like the 30%, 40% within 1 day, it could bounce back within 1 day. And obviously they immediately say, okay, we try to find some auditor solutions. Why not do it early for both countries? Yeah, this happens for many years. No, it really after market crashes and after a lot of people suffer the loss, and then they come back to say, okay, we can find some solutions, and then you can provide some reports or meet some criteria. That sounds so ridiculous. Even billionaires lose the fortunes in the financial market. Individuals suffer the high inflation in the world. I said that before, like both countries, no country can afford the war after 2 years of pandemic period. They just don't know. Not calculated the cost of the war, then probably the cost of like the 40 times, 10 times, much higher than they expected.
The war multiple is very high.
You joined in the war, that's ridiculous. Yeah.
Just to follow up on your point, just for our viewers, so S&P 500 is down about 4.5% to 5% year to date. ASHR, the CSI 300 traded in the US, is down 16% year to date. And KWEB, which is all of the tech companies listed in the US based in China, that was down 40% and then had a huge bounce and is now down 20%. I still think it's probably going to be sold off more than it's going to be bid up, but that's just my opinion. I do think the regulatory environment.
I agree. This is a bounce back. So
yeah.
This is just after the bounce back, and that's to say how the market reflect that.
Yeah, this is it looks like reactive to some things that were said in Beijing. It doesn't look like there was any real policy change. It was based on, quote unquote, good talks.
Oh yeah, that's exactly right. Yeah.
Yeah, so it probably some bearishness along the way. And while we're here, of course, I'm going to pull up the fixed income, and if we're looking at CBON, and year to date down maybe 50 bips, I think year to date, and also has that yield that we've talked about, currently about 2.75%. So pretty stable given all of the things that are happening in the world. So
That's
with
why we always need an asset allocation. So add some of the bond in the portfolio, as well as that's really no way to avoid such kind of the systematic risk.
Well, peng.guo, we've been saying this for a very long time. It's just hope people will actually listen to us going forward. With that, we're going to leave it for show Z2. Thanks for tuning in. This is the end of our second season. We're going to be starting with the third season coming up soon. Thank you for tuning in, and we'll see you next week.
Thank you.